As the economist at the table, Stephen, it's up to you. Give us, not just for this month, but in a larger sense, where we are in the housing market right now in this country. It's so important to our economy.
Yeah, so the number one fundamental in housing is that demand is outstripping supply. So we have very low inventories. We have rising home prices, just exactly what you'd expect in that sort of a market. And we've been waiting for years, really, for builders to kind of ramp it up and supply us with the homes that the market requires. And builders have been constrained by a number of things. I think the biggest issue right now is skilled labor, something that David talked about a few minutes ago in a different environment. These housing starts numbers tend to blip around from month to month, but it's certainly a very good thing to see every time that you get to see an upside surprise on housing starts.
I have to wonder, we were looking at mortgage rates that have reached the highest level since 2014. And I have to wonder, Stephen, at what point will this eat into housing prices? Basically, people having to pay a lot more on their mortgages will offer lower prices typically at some point.
Well, it depends on why rates are going higher. If rates are going higher because the economy is stronger, which I think is largely true in this case, then the ability to pay is raised. So potential home buyers have more wherewithal to spend. And what we've typically seen in history is that when interest rates are rising, it's actually usually a pretty good housing market because it means that the underlying economy is good.